Hey everyone, Karli Spahr here with the Spahr Team at OneTrust Home Loans. And I just wanted to bring you some information, a little market update. And there's been a lot going on, lots of things we've been talking about, things like an impending recession, loss of jobs, wages are starting to slow down, unemployment numbers are coming out tomorrow, jobless claims came out this morning, mortgage loan applications are at the lowest level since 1997. So I'm not trying to come out with all this doom and gloom, but all these things are top of mind. These are things that we're all hearing. It's weighing on our minds, and I just want to talk through some of this, explain some of the why behind the things that are happening and why some of it may be necessary for us to get to the next point. Right now, 30-year fixed, it's back on the rise slightly. We're kind of seeing this bumpy up and down sideways motion. So it's been a strange environment, but rates we're seeing push around above 7. It's not a horrible thing. Yeah, it stinks when people were getting 3% last year or earlier this year, but in the grand scheme of things, when we look at what rates are in a lifetime, we've been spoiled for quite a bit of time, and we need these rates to be higher to slow things down a little bit, because let's face it, we were heading in a direction that was unsustainable, is unsustainable. So we need to get to a point where things are more healthy on the supply and demand front. So, other things in the news, are the Fed's going to raise the rates further to that 4 to 4.5% range, or are they going to tap on the brakes? Will they try to fix what they've already broken by breaking it again? These are all conversations that we're seeing, we're hearing, but let's face it, they need to keep rates higher to keep demand lower. We need to slow things down a little bit, and while it's a little bit painful, it's necessary. We need this recession to come and just get through it. It's going to be a tough fourth quarter, so what I want you guys to focus on is the positive. What can you do the fourth quarter to change your first quarter of 2023? What can you do every day? How can you get up, hit the ground running every day? I choose to get up between 4 and 4:30 every morning. I'm not saying you need to be crazy like that to do things, but I feel like I need to focus and get my things going early in the day. So, trying to think of some things that you can do to hit the ground running this fourth quarter and come into the year strong next year. So I want to talk a little bit about why, or what kind of benefits can we have with rising rate environment. First of all, short-term savings rates are higher. So there's that. You can move some money around, see some higher savings rate. Buyers have less competition right now. So if they're going to go out and buy a home, they are not going to have multiple offers well above list price. You're not seeing that right now. So we're seeing price reductions 10 to 20,000 below list price. We're seeing items being fixed, seller paid concessions coming back, items on inspections are being fixed. Sellers are more willing to participate in this type of arena. So what can happen for buyers, or you, if you're looking to buy a property, even if you're paying a higher interest rate, let's just say 7%, but you're paying 10 to 20,000, 30,000 below list, sellers willing to fix repairs, they're willing to do some this is a short-term rate that you're going to be paying, because let's face it, we are going to see some lower interest rates. Hopefully by spring or summer next year, we might see rates in the 5s. I know people have talked about 3s and 4s again. I just don't see that happening, but even in the 5s, we're going to see a shift. So if somebody were to buy a house at 7%, get it below list price, get all these things fixed, get the seller concessions, they're not having heartbreak over this up and down, constantly offering over, losing on properties like we saw last year. Let's face it, we were counselors for our clients last year. We are seeing our buyers in a much better spot if they're willing to look beyond the interest rate, get themselves in a comfort zone for payment, and just know that there's a better payment coming they shouldn't bank on it, but they're going to be in a better position overall if they're paying less now for that higher rate just for that short term. Some other things in the news, we've seen total applications drop 14% in 1 week. And part of that is, it's not only due to obviously refinances are less because rates are higher, but we had a hurricane come through Florida, the Carolinas, and we're seeing a lot of people just pulling back on buying in those areas. They're focusing on helping people repairing their properties, focusing on that. So a little bit of that is caused by the hurricane. We're also seeing purchase applications. They've dropped 12.6% with rates being at the highest level since 2006. So like I said, we're in for a little bit of a tough fourth quarter, but now is the time for us to focus on what are the things we can do? What things can we prepare our buyers as buyers ourselves? What can we do differently to come into first quarter stronger next year? Also wanted to talk about jobless claims. So those numbers came in at 219,000. They were expected to be at 200,000. Not that we're cheering on job loss or anything like that, but we do need a little bit of cooling off on demand. And, having a little bit more jobless claims, we are going to help manage inflation a little bit with that. Job openings dropped also, which means we're seeing companies holding back on recruiting or hiring. They're pulling back a little bit on wages, so they're just holding steady for a little bit. That is also going to help control inflation, and we need this to happen, which is going to help manage inflation, get those interest rates to come down. Rents are continuing to slow down. So rent prices were rising very rapidly. We're seeing those come down a little bit as we see families coming together, kids moving back in with their parents, maybe not kids, young adults moving back in with their parents, multi-families coming together to rent one place so that they can save money during these times. So we're seeing rent numbers go down a little bit. Inventory also still very low. We're seeing prices climb, definitely not at the level that we've seen most recently, but we're starting to see that come in line a little bit more. So there's some new numbers coming out soon. I am going to make it a point to bring a market update to you guys every week. Hopefully have some more charts and some numbers that I'll be bringing in, and we'll be posting them here for you. And certainly if you have any questions, you can reach out to me. And I want you to mark your calendars. We do have an event in the Twin Cities coming on October 25th. Venue yet to come, but it will be midday, a couple speakers, lunch, and would love to see you there. I hope you have a great day.